the first ever episode of Value Stack. I'm Bo, and known as Shaper Funds on Twitter. I'm here with my esteemed co-host, Zach, known as BTC Bop. And we're on Twitter. We're recording our first ever episode, Value Stack. So, when we're the largest podcast in the world in 2050, you might come back and listen to this one and think that it sounds different than the ones later on, and that makes sense. We don't really know what we're doing, but Value Stack. So what we do is we talk all things investing and stacking sats. And yes. I figure since it's our first episode, I think we'll do a little bio. So Zach, why don't you start? Just tell us a little bit about yourself, and then I'll do that. We'll talk about how we've met, and then we'll talk about today's episode.
Yeah. So BTC BAP, Zach, whatever you want to call me, more infamously known on Twitter, I suppose. I was a financial advisor, as you know, because we both work together, and used to really enjoy the monetary aspect of investing and the economic aspect. And that's how we got into value investing together, and kind of why we started this podcast. And so, in the last year, 2 to 3 years, I guess, it's really been more of a gradually than suddenly, as all things with Bitcoin are. I kind of left the financial world, or at least the old financial world, and have embraced this new world of Bitcoin. So, here we are in this podcast, aiming to just talk about the big changes that are going on, and how I think where I'm hoping to really unlock throughout our podcast series is, you and I have talked, Bo, so much about value investing, and I think we both agree there, but how we value things and what we're valuing them in has changed. Because value investing on low price to earnings doesn't matter in a world where earnings don't matter, because the earning power of your currency is collapsing. So we're sort of undergoing this paradigm shift, and I think Bitcoin's kind of firmly in the center of it. And so maybe, on episode 365, if we do these weekly, that'll be, 6 years, 7 years from now. Maybe we'll be valuing stocks in Bitcoin by the end of it, which is my kind of hope with this. So super stoked to start this podcast with you, and just talk about all things investing now that I can say whatever I want, because I don't care anymore. So
Cool. Well, thank you. My name is Bo, and I'm still a financial advisor. Been doing it for a little over 5 years now. Very much passionate about value investing. That's what ultimately made me want to be a financial advisor. So big into Buffett style deep value investing. And Zach, we worked together starting in early 2018, and at that time you were talking a lot about Bitcoin. And same as you, very gradual. I had a small allocation to Bitcoin. I thought it was interesting. I thought it was just simply a technology that might go somewhere. But it wasn't really until fall of 2020 where you
shoved it down your
throat. Shoved it down my throat, and I pushed back, and I continued to push back. I think eventually it got to the point where, when you can't really argue the other side anymore, when I don't have a good rebuttal for why Bitcoin isn't important, why Bitcoin isn't going to work, I think that's where things really started to take hold for me. And then the last 6 months have been kind of crazy. I haven't been this excited about anything in a really long time. Still love value investing, still very much confused, trying to reconcile some of these different, beliefs I have around value investing, deep value investing versus investing in Bitcoin versus, inflation and what constitutes a good investment in this environment. So that's where I am now, just trying to reconcile a lot, while also being so far down the rabbit hole that I wouldn't recognize myself now about 6 months ago. I think when it comes to this stuff. So I think this podcast is a great place for us to kind of debate, talk about how we see the world, slightly different. I think so. Some debate, and then I think just some talking about what we are listening to, what we're reading, and hopefully helping each other learn and helping our listeners learn as well.
Yeah. That's why I'm stoked to do this, because I mean, value investing has been dead because the value has been dead, right? Like for the last decade, it's been growth investments, and the reason we are coming to find out in hindsight is because companies, like, it's not rational to like make a profit. Like it's actually more rational to not make a profit at the opportunity cost of like gaining way more future growth, like right, like by plowing reinvesting in your company. Because if your earnings are deteriorating, then like sustainable business model is not to try to eke out your profit margin. It's sustainable business model is, who cares about turning a profit? Let's grow, so that like when there is something to store our value in, we can capture the market at that moment. So I think this is a crucial time for investing. It's a crucial time for us, being just kind of like where we are, and our late 20s, and kind of like, not not going the traditional path anymore. So
Yeah.
I'm really excited to see how Bitcoin reshapes value investing, because it finally gives us something to value stocks at, with a consistent relative measure in perpetuity. It's going to be the same every, like the Bitcoin that our kids value and measure companies' cash flows against, or Bitcoin flows, sat flow maybe. It's going to be the same sats that we're valuing, right? Like, so I think that adds a consistency level to discounted cash flow growth, and how you model and value companies, and ultimately, in that effect, like how companies position themselves in the market, because they want to portray a certain feature or risk characteristic to their investors. So, yeah, dude, this is a great idea. I'm glad that we're doing this, and yeah, it's certainly going to change over time. Like I think how we structure it, and we'll grow kind of organically, like the Bitcoin universe.
Right, right. Well, yeah, what you just said is, I think, a good segue into what I think is the main topic for today, which is debating inflation. I think it's top of every investor's mind right now, and I think even just most Americans, for that matter. I think people are aware that there's been a lot of money printing since the COVID took hold of the world a little bit over a year ago. This is April 11th for anyone listening, in 2050. This is April 11th, 2021. And there's a ton of money printing. And
YouTube's going to take us down by then.
uh, so yeah, I think this is a very prescient topic, inflation. And so, we reviewed two things, two podcasts actually, that we listened to in preparation for today's podcast. And so, two, what I believe are vastly different views on inflation and the environment we find ourselves in. Um, we have Michael Saylor, and I've heard his you know
Chad.
what he thinks about inflation many times now. But he was on a podcast with Guy Adami from CNBC, and he talks a lot about what you just talked about a
Is
moment
Guy
ago.
the bald one? Is he the bald one? God, I'm trying to think which one that is.
I don't
It
think
doesn't
he's
matter.
bald. I don't think he's bald. He's tall, dark, and handsome, Guy Adami.
Okay.
Yeah. He
It's been a year since I've watched CNBC. Forgive me.
uh, uh, yeah, so here's Michael Saylor on talking about inflation, talking about the cost of capital now that the Fed is increasing the M2 money supply at 25%. I think he uses 24% as his cost of capital in that podcast. And then I wanted to juxtapose that conversation with, and I meant to get his name right before the podcast. I meant to practice to say his name, but Naufal Sanaullah. Naufal
Oh
Sanaullah.
yeah. Yep.
Inflation not so certain. And he was on the Business Brew podcast with Bill Brewster talking about why he thinks we can print more money without seeing any meaningful inflation. Now, I don't think the two things are mutually exclusive, or the two views on the world are mutually exclusive, but it's hard reconciling these two views. So, Zach, why don't you talk about Michael Saylor's view on inflation and what he projects given the central bank and Congress's actions with money printing?
Yeah. So Michael's like, cash is a melting ice cube, and you need to get rid of it. It doesn't hold its value. The reason it doesn't hold its value is because money, like all things in a economy, is subject to economic force, meaning supply and demand. And what you had last year was quite the precarious situation where you've got demand for money, demand for goods and services falling, and which is essentially demand for money, because money is the thing to facilitate those. And you've got increase in supply. So double whammy effect on the depreciating purchasing power. So, what you wind up seeing is like huge, like a massive amount of oversupply in the market. And, I equate that to like think of like the real estate bubble. Like there's 100 houses that were built in your neighborhood, but only 4 people want to buy them. Well, the house prices are going to like eventually, like it's going to come to reckon. And you can't just put all that supply on the market without having, a equally significant retaliation response. So, Michael Saylor's perspective is like, look, Bitcoin has a finite supply. There's 21 million Bitcoin. You can break those down into, in theory, infinite units, but not infinite value, because ultimately, like, one Bitcoin is one Bitcoin. And, it's like I can cut an apple in half. Now I have 2 halves of an apple, and I can feed, 2 people with like less. I can still, like, 2 halves of an apple is equal to 1 apple. But like, until we get to a certain point, like I can actually break it down and feed more people. Like, 2 people can have I don't know. I'm kind of probably botching this
This
explanation,
analogy.
this analogy, but like my point is that, like, regardless of like how small you break Bitcoin down, it doesn't devalue its whole number. So like, unlike the current predicament, because dollars can't be broken down to the right of the decimal. So, like the only way to get more dollars is to print more dollars, and that devalues your existing dollars. And that's exactly why Michael Saylor's like, you got to be in Bitcoin, because you can have 1 Bitcoin, or you can have 100 million sats, or you can have 100, or whatever the number is, 10 billion millisats. Like it's still 10 Bitcoin, and it's still the same number of values. So, I mean, in theory, I actually wrote a tweet thread about this. Like we only need 1 Bitcoin even for the entire world to work. It's not the infinite divisibility that's the problem. It's the devaluation of the prior money supply that's the problem. And Bitcoin having that fixed characteristic protects the Bitcoin economy from that centralized inflation that's created by the economic policy, monetary policy that happened last year. So,
let me ask you this. Michael Saylor talks a lot about the cost of capital being 24% now, because that's what the M2 money supply increased by. So, I'm not going to go touting the CPI, but my question to you is 24% inflation inevitable as a result of what occurred last year?
Inevitable. It's already here. It's already here. Like, it's here. Like, houses are up 24%. Equities are up 25%. How is the stock market up?
Yeah.
How's the stock market up? It's not. It's not up. It's down. and it's down because they're pricing it in Bitcoin correctly. It's up if you're pricing it in dollars. So, I mean, like 24% cost of capital, yeah, I think it's higher than that. And the argument is like, well, CPI is 5%. It's like the goods that are in the CPI are mostly subsidized, like subsidized by the government. Like like the way that they actually go and measure the CPI, right? It's like they dispatch people. I think like I read this on Fred's websites, but like I may be botching the details a little bit, but like they literally take people, they go into like different regions, they like survey what the prices of goods and stuff are at grocery stores, and they smooth out the weighted averages, and like that's their dot plot, right? And like I'm sorry, but like the cost of milk is not a good reflection upon the inflation of an economy, especially when the production of milk is subsidized by the government. Like, so, there's, I think like if you look at the right things, the things that people save for, right? This is, I think the part that people miss about the CPI argument, like you don't save money to buy milk. Like, just as an example, like that's not something you save for. It's something you get and you buy. And so because of that, the cost of it is not really as important. The decreasing purchasing power of your currency when you're not saving over time for something is less relevant. However, for things that you have to save for, which means you have to put risk in the time of it, like a house, for example, something you might save for a year, 2 years, just to buy, just for a down, maybe 5 now, just for a down payment. That's where your measurement of inflation is, because that's the thing that my money is actually supposed to be storing value towards. And traditionally in investing, it's said, oh, hey, don't put your risky, the stuff that you have like to save for, don't put that in stocks, put that in cash, right? But that's absolutely the worst advice, because you'll never, ever hit your savings goal anymore doing it in cash. So I think Michael's like really like the knight in shining armor that Bitcoin needed, because he's a billionaire, he has nothing to lose, and he's not scared to like say the truth. And he was like a relatively nobody billionaire celebrity, right? Like nobody knew who Michael Saylor was before Bitcoin, but now he's like the hero, and like my mom and dad like know who he is, and like he's like the voice of like reason in this like Alice in Wonderland economy that we live in, bro.
Mm-hmm. Yeah, he's definitely helped me a lot. I'd have to say he's one of the people that have really helped me understand the bull case for Bitcoin and why it seems inevitable in this environment. So big fan of Michael Saylor here. Now, just going back a minute, I guess my question is, yeah, we save money, we store value in real estate and stocks and bonds, commodities, what have you. But we also consume. And for a lot of Americans, they don't save. A larger percentage than certainly should exist. A large percentage of Americans don't save at all. So they're really just consuming. And for them, groceries and rent, gas prices, these are the things that they have to pay for. Now, we've seen a big move up in real estate in the last year. We've seen a smaller move up in rents. And
Rents
we've
are
seen
subsidized, right? And like, I mean, like the government's giving rent protection out, so the upward pressure on rent is mitigated. I mean, New York's been having rent control, San Francisco's been having rent control, the cities with economic opportunities. On top of that, like I would argue, not I don't mean to interrupt your point, but like I want you to finish that thought. But just about gas, like even I work from home now. I don't drive. I don't commute to work. How many people are in that same boat? And the more advanced your education is, the more likely you are to work from home. It's your most basic, it's your, high school graduation workers that are the ones that are actually needing to commute. But that's not, I mean, they're already relatively poor. Like it's, what's inflation's crushing is the middle class.
Yeah. 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 Well, I guess my thinking is like I wouldn't say that, looking at um, just stores of value is the only measure of inflation. CPI shouldn't be the only measure of inflation, but some mosaic
Mhm.
of the two, depending on who you are and what percentage of your income goes towards consumption versus saving.
Well, and don't they use so like I'm not sure how many of our viewers are familiar, but back when I was in college, I distinctly remember my Keynesian professors telling me that CPI was like out of date and that the PCE was a better reflection of inflation. And this was 10 years, 8, 9 years ago. So, and that's I believe it's the production or producer, I don't know, can you look it up? PCE,
Yeah. Yeah.
product consumption, producer consumption expenditure, personal consumption expenditures. So
Hmm.
rather than measuring the price of goods, it measured how much of a person's income they actually expended, which was more of like how like that was a more accurate reflection. It's like how much did they save of their income because it kept the real wage and the real cost of goods on the same scale.
Yeah.
They so but even like there's many measures of inflation, right? You could say the stock market is a measure of inflation. What's the quality of, what does it cost to, and I like where you're going with that. Like, what does it cost to invest in quality companies? What does it cost to buy a respectable home in a respectable neighborhood? What does it cost to, live in even if you can't buy, so yeah, I think there's no one measure of inflation
Right.
because ultimately certain industries and certain products and certain goods and certain services are going to have different inflation rates because I did this talk at Bitcoin kindergarten. Inflation is ultimately the long-term rate of growth is measured on technological growth rate, and that's not constant depending on what vertical or what industry you're in. So because of that, like there will be different inflation rates for different goods and services and different like the cost of a financial advisor, the inflation rate of what a financial advisor charges may be different than a heart surgeon. And those will achieve different growth rates correspondingly.
Right. Right.
So
Yeah, I agree with all that. I guess the most recent CPI suggests inflation's running at 1.7. It looks like PCE says inflation's at 1.6. So, but the
per
stock
week
market's up. Stock stock market's up 35% over the last year, and
in a
people all over the
in a
country are
depression.
being priced out of the housing market at the moment. So, um, yeah, it's a tough thing to reconcile. But let me real quickly just kind of outline what Naufal Sanaullah, and I know he's a listener, so excuse me, Naufal. I know I'm mispronouncing your name. I should have done more work ahead of time, but thanks for listening. Um,
He's our favorite listener, by the way.
so Naufal's argument on inflation is that um, the the United States is so demand constrained right now, but not supply constrained in the least. That and largely before COVID, but now exasperating because of COVID. So his theory was we could have been printing a lot more coming out of the global financial crisis and should have been spending a lot more fiscal stimulus throughout the last decade, and where we were already behind the curve. So these $3 trillion stimulus packages that we continue to get, he thinks are still not enough. Now he doesn't rule out there being inflation as a result of all this eventually, but at least right now it seems as long as this many people are unemployed, as long as globalization continues to move in the direction it's moving in, and technology, which we've actually seen a lot of in the last year, led to efficiencies in the service industry. When we order our food, it takes, well, actually we do it online. For most
It's
restaurants,
quicker.
we scan a QR code even when we're in person.
Right. Right.
So it just requires less people to get the same amount of work done. And so we're seeing these productivity gains. We're seeing globalization still continue to exploit cheap labor overseas. Couple all that with the the large amount of slack in the U.S. economy, and we should be able to print trillions more without having to worry about significant inflation. Now, he doesn't rule out there being a level where, okay, we print a certain amount and we start to see, PCE and CPI inflation. Of course, that's possible, and he predicts that that'll actually will occur because now we've got
Right.
a Democratic-led House, Senate, and White House. So the political impetus to print more money is there.
Is there?
So I think we're headed in that direction. I guess the only way to reconcile, and I believe, I believe a lot of what he says. I feel like it's a very compelling argument, and not many people can explain why we didn't see inflation over the last decade. But I think that that's a pretty reasonable way to look at things. But how do you reconcile that with what Michael Saylor says, that the cost of capital for corporations being at 24%? Where is that money sitting as to not lead to
Inflation, right?
inflation?
So I think it's important to understand. Great, you asked a really nuanced and really informed question. I think it's important when you're looking at inflation, when you ask this question, to know how the money printing like mechanically works. Because when you figure out how it works, it makes a lot of sense. So, the way the Fed expands the money supply is by quite literally adding some zeros onto FDIC member banks' balance sheets, which, if the money just sits on their balance sheet, doesn't cause inflation directly. Now, inflation can happen because of speculation, like speculation of inflation based on having money on balance sheets could lead to inflation, which is probably what we're seeing, which is what I think Michael Saylor is hitting on. But it doesn't actually cause it directly, though it will precipitate to it. So why am I bringing that up? Well, I think you want to consider the backdrop of what the money printing has occurred under, the most stringent loan requirements we've seen in history. I mean, Dodd-Frank has all but tightened the noose around the purse so tightly, or like the strings around the purse so tightly that, like, dude, I have like 800 credit score and I can't get a loan, like a personal loan. And like that, I'm not alone in that either. But so I think like the velocity of money is combined with the money supply is what actually releases inflation. And the velocity is being kept down by overly onerous regulation and roadblocks towards, I mean, like, but it's almost like, but like, as I say that, like, too, I think about like the sheer ridiculousness of like last year and like the CARES Act and like giving businesses like 50 grand and just free money. So like, I don't think it's completely consistent, but like, that's what I'm saying. We're kind of living these two worlds where, like, if you're a rich guy, you're a business owner. Because if you're rich, you're usually a business owner. Like, you're either a successful investor or you're a business owner. Most rich people are business owners. So you have the tax deductions. So you have the tax code set up in your favor in that way. And then the government just handed you money. But if you're a middle class person, like somebody who is a wage earner, not a wage payer, but a wage earner, like but went to college and has debt, debt is your biggest asset, or your biggest, not asset, but it's your biggest part of your balance sheet, and your equity is probably very small. So, when, or on the other side of it, your assets are all cash. So, I think like inflation is being kept like from unleashing because of the strict monetary policy in the lending requirements. But at the same time, like, it's not the same for rich people. So it's which means that the rich people get the money easy, so they can instantly go and take that money and borrow it. And because they're borrowing a depreciating asset, their liability is worthless, and go put that in an asset that's appreciating, like equities, where they can take the risk because they're wealthy. So they just precipitate the gains further in their side of the corner.
Mhm.
And you have the other side where like individuals like can't get loans, or like pay a personal loan 15% rate, or something like that, like, or only can buy public equities. Like I can't get invested in the private equity, like, so I can only get to the market. I can only invest in these equities by the time they're so obscenely overpriced. Once the billionaires have all, sucked all the capital, all the value out of the investment, like then they let it out to the public to cash out on people. So like, and you can't get the money. So like, cause the credit requirements from Dodd-Frank are so tight. So I think it's just like this dichotomy that we live in, and it's like two different realities depending on who you are.
Mhm.
Like this is the greatest thing ever for fiat cantillionaires. They love this, dude, because they don't have cash. They borrow cash and invest in real assets.
Right.
It's
Right.
the people that are watching our podcast that are the ones that, except for Naufal, but like it's, the people that are watching are the plebs, man. The plebs who need Bitcoin, like the plebs who badly need a store of value that's accessible to them.
Mhm. So
Those
let
are the ones
me,
getting wrecked by inflation.
yeah, just want to butt in there because the environment that you described, where credit requirements are very high. That certainly is the case now, and velocity is low. Now that's how the world is now. But with the like enhanced unemployment benefits we've seen, PPP loans that are just grants, and
Oh,
just general uh, handouts, just stimulus checks that have been sent out. I think velocity is probably increasing, and I think that as money gets in the hand of the people who need it the most, maybe credit
they'll spend it.
requirements will drop. Um, so maybe for the world that's coming, maybe we start to see inflation as measured by CPI and PCE.
Yep,
So kind of how does that
it's
tie
coming.
into yeah.
It's coming. You look at Weimar Germany, and this exact same thing happened. Before hyperinflation, there was deflation, because it's a psychological process, right? When the economy crashes, you think, oh shit, I need to store my money because we are in a crash. I need this for tomorrow.
Mhm.
And for a little bit, you stop spending, and that causes deflation. And then the government starts printing money to trick you into spending it until you have that, oh shit, I can't save this money.
Mhm.
It's not worth anything anymore. I need to get rid of it all as fast as possible. And it's like a head fake. Like we got the deflation, and then we're going to get crazy hyperinflation. And so like I'm not waiting to get the signs from the people who don't want me to realize what they're doing before I start protecting my value. That's the thing. Like we only have so many productive capacity days in our lifetime. And every day I have one less. So it is very literally like a matter of like a metaphorical melting ice cube, that like every day it's like I every day that I'm not doing something, I'm losing. So
Yeah. Michael Saylor talks about turning cash from a liability into an asset with Bitcoin, and
and
I
I
think
mean, quite literally, Bo. Let's see, I might have a sea buck in here. Oh, look at these sea bucks. So,
why do you
this
have
is
that? You think you should?
dispensaries. There's I can't see the serial thing, but it says this note, right? There's three types of federal bonds. There's notes, bills, and bonds, or three types of fixed instruments the federal government issues. Notes, T-bills, T-notes, T-bonds, depending on the duration. This says it's a note, meaning not a bond or a bill, but a note. And it is for all debts, public and private. I don't know. I think that means that's an asset because it's like settles up. I don't know.
I think he's talking specifically about cash on a company's balance sheet when they don't
Right.
really know what to do with it. They're not ready to make an acquisition, might not be keen to buy back their own stock or pay a special dividend. So what are they doing?
It's sunk
They're
value. Like it's already expended energy. You know, Michael talks about expended energy and like money being energy force all the time. And like that profits that are pertain to earnings on your balance sheet, those are quite literally like sunk cost earnings. Like that's already energy, resources, time, expertise, advertising, competitive advantage, moat. It's all baked in, everything right there in the rearview mirror in the form of retained earnings. Now, you cannot do anything with it other than try to hopefully create more value with it in the future, or at least have it retain its value, not dollar value, but value. Like, because ultimately, dollar value doesn't matter. Like, it's purchasing power value that matters because that's what we use money for. So, you know, I think it makes sense that he's like, look, like, you can't cry over, you know, to go back to milk. I guess I'm picking on milk today. Dairy farmers, I love you guys, but like, you know, there's no sense in crying over spilled milk like that happened in the past. Like, all we can do now is protect the value that we still have and make sure that it's going to continue its, you know, retain its value in the future. And it's my job as like a CFO or a controller or whomever, you know, a CEO. Like, there are probably a handful of different people in a particularly a large company that, like, from a strategic level, that's their responsibility, and they owe that quite literally to the shareholders in a fiduciary duty to do so. So I think MicroStrategy and Michael Saylor have been doing. They set the standard and what it means to be responsible fiduciary to your shareholders. Like it,
yeah.
you know, but it, there's. It's not easy to just like come into a room and be like, "Hey, you guys are all wrong. Y'all don't know what you're talking about." Like, I'm right. You should think and look this way instead. People don't. People just don't naturally take to that well because it challenges their worldview, and particularly for a lot of these successful, you know, call them cantillionaires because they benefit from the Cantillon effect. They don't want to admit that they've been benefiting from the collapsing dollar. So it's quite a matter of pride for them too to admit that not only I'm in this position because of this effect. And to admit that it's now an issue would be also admitting that I've been, you know, not necessarily maliciously, but I've been benefiting from the way the game is set up.
Yeah. For listeners who don't know, what is the Cantillon effect?
Those that are closer to the source of the money, the source of the origination of the money, are benefit from it more. And so the closer you are to a central bank, meaning like if you work in banks or if you work in politics or like, you know, it's the further you are away from the money, the less you're going to have. Like, and the thing about Bitcoin is that there is no source of the money. It's everyone. It's everywhere. It's everyone. It's censorship resistant. So you are the source of like, I mean, like, you know, there's the miners, right? Which I mean, you know, and like everything, nothing's black and white, right? Like there's miners of Bitcoin, which are the ones that actually take the electricity sunk cost to ensure that the Bitcoin get created. And so, you know, you could say that they're kind of the money printers. And I think we'll probably see civilizations form around Bitcoin mining because they will be the money printers. But they won't control the money printing. They'll only participate in it. And I think that's a really small but important distinction.
Yes, incredibly so. I would agree with that. Let me quickly just kind of recap what we've talked about and then ask you another question. So we've seen monetary stimulus coming out of the global financial crisis that has set a bid under all risk assets, pushed everyone further out the risk curve, fewer people investing in short duration bonds, more people investing in risk assets, whether they be tech stocks, real estate, things like this. So those things have had a wonderful decade, while the average American has not. I'd say this is why we saw a big populist movement in recent years in the U.S. And so, but now coming out of the COVID crisis, we see something different. While we've had really low CPE, PCE, CPI, PCE, sorry, type inflation over the last decade, with soaring asset prices, now we're seeing money in the hands of people that have the propensity to spend it. So velocity is likely to increase, and we're likely to see more traditional measures of inflation increase as well. So not just asset price inflation, but traditional measures of inflation, consumption inflation.
Right. Like once you, like it's going to be pretty much not quite overnight, but it's happening now. It's starting to happen quicker, where people are starting the message of, hey, the dollar's not necessarily a great store of value. Like that narrative is being spread in our communities. Like it started with only the cypherpunks, right? But it's spreading much more. NFL players are getting paid in Bitcoin, and the Kings are talking with Jack Mallers and Strike on getting their whole team paid in Bitcoin if they so choose. I mean, it's far beyond. Like I'm insensitive when I say this, right? But like, Bitcoin's the real virus, like, because it can't. there is no cure for it, because it's an idea, and nothing is more powerful than an idea whose time has come.
Yeah, and one
we need
absolutely decentralized.
We badly need a money that can retain its value, so that we can not use money as a weapon, or lack of ability to participate in money as a weapon, more specifically.
Right. Okay. So now I think we agree wholeheartedly on what this means for Bitcoin, short and long term. I guess on subsequent podcasts, we'll talk more about Bitcoin specifically, and what the technology is and why we believe it's unstoppable. And going back to what we talked about at the very beginning of the podcast, the point where I decided to go virtually all in on Bitcoin was when I really couldn't argue the opposite side. So I think that's going to be one of the main topics on subsequent podcasts. Potentially, just playing devil's advocate with Bitcoin. So I know we agree there with what's going on with central banks and with Congress and spending. But what does this mean for the average investor? Someone who, say, invested in the S&P 500. What does that backdrop, this economic, first monetary, now fiscal stimulus backdrop, what does it mean for the average investor?
Yeah. So, stocks are a better store of value than dollars, and they'll continue to be. I think that companies are going to continue to lose relative value in Bitcoin terms. So if you're a, maximal seeking rational investor, and your goal is to maximize, real returns, I think unfortunately, until Bitcoin achieves monetization, there's not really going to be companies that make Bitcoin faster than Bitcoin's value appreciates in real terms. So I think it's hard, which is why I think we should just reset the economy and switch to a Bitcoin standard now, because I think that the longer we delay the economic inevitable, the more years of like time, time is not forever, right? And like the more years we waste in this like fiat investment world, the more likely it's just gonna take long. I just like we're just kicking the can down the road, and like I think it's
So
gonna yeah go ahead.
expound on companies that aren't how did you say it? Because I think what I'm getting at here is current for the average investor in the US right now, you need to invest in companies that are somehow going to grow quick enough to keep up with the rate of monetary expansion. And
Mhm.
this is where I'm having the most difficult time as an investor when I look at companies like Berkshire Hathaway or Lockheed Martin. Facebook's not a good example because Facebook is also growing very quickly. But when you look at the average value stock out there, call it Kraft Heinz, just making it up. It's a Berkshire Hathaway position. How is there any um, is there any potential for that to be a good investment in this environment? If it's growing, say if let's say it's growing the top line at 4% organically, or something like that.
I mean, as much as I want to say, I don't think so. Like, I truly, and I mean, look, I don't give financial advice anymore, like in profession, because I understand that directly conflicts with what most people want to hear, and what most people are taught to understand. So it's like, I mean, that's why like I invest how I invest, and I don't tell people you should invest this way. I tell people this is how I'm investing, and I tell you this is why I'm investing in this way. Like,
Okay. How about
so
a quick mid podcast disclaimer? We are not your fiduciaries, Naufal and everyone else listening. We are not your fiduciary.
especially
This
in
is
the
not
fall.
financial advice. Don't listen. We're just babbling here. But Zach,
Yeah.
how do value investors
I mean,
succeed in this environment?
so if your company was spending dollars and turning 100% of your retained earnings in Bitcoin, then I think you maybe found an investable company. I think
Okay.
if you're retaining your profits in cash, you can't possibly grow your profit margin or your profit rate. Like you can't grow your just total, just real profit number fast enough to outpace. I mean, you'd have to be growing at 50, 60% your bottom line. Like,
Right.
but Bitcoin grows at 200%. So show me a company that's growing its bottom line at 220%, that's taking that bottom line and then reinvesting it into Bitcoin, and I will put it all in that instead. Like, but there is no such company. Not even MicroStrategy. They're not growing their bottom line at 220%. They might be, and if they start doing, Bitcoin consulting, but you know, I think because of that, it makes it really hard for me to get behind investing in equities because they also have all kinds of additional risks. They have regulatory risks, they have environment, industry risk, they have political risks, they have theft, I guess. Like even if they're storing their Bitcoin, like what if their Bitcoin gets stolen, So like out of their custodian, like so to me,
Sure.
when you invest in a company, there's just reputational. I mean, there's brand risk, there's reputation. Like, there's so many there additional, risks involved, and because of that feature, the necessarily the reward should be potentially greater. And I just don't see that. I don't see the potentially greater reward yet until companies are taking their balance sheets and retaining their earnings in Bitcoin because it makes no economic sense to
Right.
like if I'm going to spend $100, like just as an example, let's say I'm going to spend $100 to start up a lemonade stand and I'm going to make $50 by doing so. But Bitcoin, by putting that $100 in Bitcoin instead, but it would take me a year to like, let's say it would take me a year to make that lemonade stand, like make $50. Probably a crappy example, but just for simple explanation, like, so like my return on investment, I made a 50% profit on my lemonade stand that year. That's amazing, right? Like, but if I just put that $100 in Bitcoin, it'd be worth 3 times as much value. So like the opportunity cost of doing anything except for buying Bitcoin in my mind is too high until we achieve monetization. Few understand that.
I was hoping neither one of us would say that. I'm just kidding. Yeah, no, I don't disagree with any of that. I think it's just this is the big thing I've been wrestling with personally, and part of the reason why I wanted to have this podcast with you is as I go all in on Bitcoin with my net worth. You know, it's I'm partly giving it something that I love, which is value investing. But it's hard right now. Valuations are high. Hyper Bitcoinization is in the top of the first inning, and it's hard to find something. Now, there's a few companies out there I'm excited about, but in general, I'm just not excited about equities in this environment. So, trying to figure it out for myself.
Yeah, I mean, I'm invested in, you know, some Bitcoin related companies like Riot Blockchain, only because, and only because it's in my Roth IRA, and I don't want to take the money out of the Roth IRA because of the kind of walled garden that it's now put in. And I don't really.
Have you taken out your basis?
No.
You can.
The company that I had my Roth IRA with didn't keep track of my basis. You may have heard of them. So,
okay. Well,
but yeah, so I don't want to do the accounting nightmare for that. So, and it's fine. Like I'm so deeply in Bitcoin, it's a proxy play anyway. And it's like, to me, but anyway, the reason I'm saying that is like Riot, for example, like they're like a leveraged play on Bitcoin, because they invest in actually making Bitcoin, So like if the price of Bitcoin goes up by 100%, their profit margin, let's say their profit margin might go up by 500%. Like I don't actually like know what their specific margins are. Like I like this. I like the stock, and that's truly it. Like I don't know their numbers. Like I haven't looked. I don't care because it's monopoly money in my mind. I'll be lucky to ever get it out by the time I'm 60. So, but it's a leverage play, and like that's the only type of equity that I feel even remotely interested in investing in, because they are retaining their earnings. Quite literally, their earnings are Bitcoin. Like they're not turning their earnings into Bitcoin. Their earnings are Bitcoin. So, right. I mean, they mine Bitcoin out of thin air, and they just have it. So, and they're going to be one of the largest Bitcoin miners in the world. So, but I don't know that risk profile is comfortable. I don't even know that I'm comfortable with their risk profile. I don't know that I even understand their risk profile all the way. And that's why I choose not to really invest anymore, because of that dilemma that I'm in. So, I would say that it's probably not a suitable investment for most people. Like Bitcoin dropped 10% and Riot dropped 60. It's like, what?
Yeah.
I mean, I remember texting you about it. I was like, dude, what do I do? Like, and you gave me good advice. Maybe you should lighten up on the position. And that was great advice. Like, cause I should have. And like, I think like investing is kind of in this weird purgatory right now where nothing makes sense. And the sooner hyper-Bitcoinization occurs, the sooner all will be right in the world again.
Since we've used that phrase a couple times, for the listeners that aren't familiar, how would you describe hyper-Bitcoinization?
Everything that has value becoming valued in Bitcoin. So take all of the real estate in China and all the real estate in the US and all the companies in Australia and all the wine in France and all the pasta makers in Italy and the giant laboratories in the middle of nowhere in Africa, and like add all the value of that up, and all the currency and all of the equity value and all the bonds and everything, add up everything that has value in this world, divide that by 21 million Bitcoin. That's hyperbitcoinization.
Thank you. All right. Well, I think this is a good segue to change topics ever so slightly. We had a few different articles and stuff that we wanted to discuss here. And I think that, when I listen to a podcast on Bitcoin, as much as I am really not focused on short-term movements or where Bitcoin's going to be at the end of 2021 or even the end of 2024, I always want to hear what people's price targets are, because it's a little like porn. It's so let's talk a little bit about price targets for Bitcoin. And specifically, you sent me an article. JP Morgan revises Bitcoin target to $130,000, citing decreased volatility. Now, in the article, they talk about how they get to 130,000 per Bitcoin. And their thinking is 130,000 puts Bitcoin at a price where it eclipses the private investment into gold. Now, Michael Saylor talks a lot about the total investable market of gold being about $10 trillion. So this was a very interesting article to me, because I always think in terms of, total investment into gold.
Right.
But what JP Morgan is talking about, they're making the distinction between private and public, countries versus individuals and firms and anything private. So their thinking is Bitcoin at 130,000 matches the total private sector investment in gold.
Right.
Now, I think that implies that if governments around the world started to invest in Bitcoin, then they would need to raise their price target to somewhere around 600,000 to account for the public investment in gold. So let's talk about price targets for a minute. What are your thoughts?
Yeah, so I only have one price target. 1 Bitcoin is equal to 1 Bitcoin, just as the $1, like what do you, like when we say like what's the price of $1? If you ask someone like in Europe, they'll give you a different answer, but ask an American and they'll say, "What do you mean?" It's $1. And that is my price target for Bitcoin, and it truly is the only one, because it reinforces the belief that Bitcoin is money. And like all monies, it's just a belief. Nothing has value except for the agreement that we all collectively decide to put into it. So money by governments is just kind of enforced through political representation and through political domination, rather than, choosing by free will.
So I know it's a matter of months before I'm starting to talk like you, because that's been the general trajectory, is I'm on your trajectory, but a little bit further back in time. So let me think.
I mean, I think like this year we'll see 200,000 in dollar
Okay.
price. Like
Thank you.
We'll see 200K in dollar price. And I don't know if we hold it there. I don't know. Like there's like Will Clement. I think he goes to ECU. He's like 19, dude. Gosh, I wish I was as awesome as he is as 19, man. Like if I just anyway, like he puts out a lot of great content, and he talks about the super cycles and like how maybe this is the last cycle. And I sort of agree. I don't know, like, because I'm like we still kind of live like 1 foot in the in the old world, 1 foot in the new world. And I think all, like, not just you and me, but like all of us, like we still live. I still spend dollars, dude. I don't spend Bitcoin. Why on earth would I do that?
Mm-hmm.
So like now, to most that would say, see, Bitcoin's not money. And it's like, no, the opportunity cost of spending it is too high. It's not that I can't. I could buy anything I want with Bitcoin pretty much from anyone.
Right.
I cannot say the same for dollars, but anyway, so like the super cycle effect being like, we all kind of overnight stop pricing it and this becomes money. And I think a more interesting and intriguing question in my mind is, at what price does the super cycle kick off? When does the hyperinflation begin? At what point in reality does your everyday person wake up and say, oh shit, I need to hold Bitcoin instead? Is it 200K? Is it 300K? Is it $1 million? Is it?
I think about this too. No, I think of it in slightly different terms, not necessarily the price per se, but I think I think we'll have some pretty pivotal moves when Apple announces that they've invested in Bitcoin, when the Fed or any most sovereign wealth funds and treasuries not invest in Bitcoin, but announce they've invested in Bitcoin.
The day that a central bank announces Bitcoin is being held, it's over. I mean, it's over. It's already over, truly. Yeah. Like, it's already over. It's just playing out. But it's not obvious yet to most. It's obvious to the people who've been following it, but like, the day a central bank adopts Bitcoin is the day they admit, subconscious, maybe not directly, but like they're admitting that if like that it's a better store of value. Like, it's over.
Yeah.
And I think
their own efficacy is in question at that point.
Yeah, it's like, hey, well, if you're so I think the United States owes the world, and particularly its own citizens, to adopt a Bitcoin standard as soon as possible. I don't remember his name. There's all these like, blue checkmark people that throw out some crazy stuff on Twitter, but people say it's like un-American, or I think it was Peter Thiel, or I think like he wasn't. His point actually like was more nuanced than I realized at first. But he was saying about like how China is like China wants Bitcoin to succeed, and like he's right, they do. And so, but the answer is not to stop Bitcoin, because that doesn't work, because it's going to succeed anyway. The answer is, we need to view that exactly how he said it, as a threat, not to shut it down, but to embrace it, because it is inevitable. And so the best thing the United States can do is adopt Bitcoin, is admit our money's worthless. We scammed everybody. And guess what? All these stimulus checks that we put in Americans' pockets, hopefully they were smart enough to be listening at BTC BAP on Twitter and put their stimulus check in Bitcoin. And now we're rich collectively as a country, and we're not rich in C-Bucks. We're rich in real wealth, finite digital wealth that's demanded by the Chinese citizens. So the strategy is not to try to shut it down. The strategy is to adopt it, because it is coming. And if we adopt it, we will lose. If we do not adopt, we will lose.
Agreed. I agree, and I think Peter Thiel's that was just interesting in general. The things that he says, looking at Palantir. Well, first off, he's a multi billionaire. So there's that. And then Palantir's largest client is the CIA, I think, accounting for more than 50% of the company's revenue, something like that. So, so it's really interesting what he has to say about Bitcoin, given those.
Yeah, I think I still haven't completely ruled out that the CIA created Bitcoin. I think that's like kind of like, I doubt it, right? But like, dude, I don't know. You never know. To me, it does seem wise. Like here, I'm just gonna make this out there point. Like, I don't believe this. I've just thought about it. Okay, if I was a government, if I ran a government and I knew that my money was fake, and I knew that eventually people were going to figure out that my money was fake, and that I was going to lose power when that occurred, the smartest thing I could possibly do is figure out a way that to supplant my fake money with better money and get everyone to adopt that. But not tell everyone that that's my new money, because if I told them that was all my new money, nobody would adopt it. So what's the smarter thing to do is to tell people, don't use that money. That's evil. That's for criminals. And so that people are like, nah, big brother, I'm going to do it anyway. And so then you trick people subconsciously to adopting it on their own free will, and people walk right into your trap. So I don't think the United States government's that prescient, truly, but I wish they were, because I would feel a lot better about our leadership if they all were doing this all along, and that this was just a way to default on the dollar, but keep America in prosperity and at the global leadership. And if CIA, if you are listening to this and I figured out your plan, just like, no, I like what you're doing. Like, good thinking.
Very Sun Tzu of you.
That's very Sun Tzu. And that gives me hope. Like, I'm like, maybe our leaders are so smart that they want us to think they're stupid. But I think, but it's more likely they just are stupid.
They've done a great job of that.
That's right. Like, they've done a great job of convincing us otherwise. So they're either the smartest guys in the room or the dumbest guys in the room, depending on what paradigm you're operating from.
Right. Well, Zach, how are we doing on time? Do you know?
We're at an hour 5, so we're like double length of our planned amount. But
that's awesome. Well, I think this has been a great discussion. There's a couple items here that we can always push to next.
Yeah, we'll save them for next week. Yeah. I think keeping these around an hour is anything more starts to become untenable. Just like, I'm not going to listen to my own podcast for an hour straight. So if anybody made it to this point all the way through, please subscribe. We love you.
Follow BTC Bop on Twitter. Follow Shaper Funds on Twitter. We're Zach and Bo, and this was the first episode of Value Stack. It is Masters Sunday, so I'm about to go watch how the Masters tournament ends. If you'll notice, my hat has Augusta National in Los Angeles, so tricky.
You know this one.
And it's gone,
And it's gone.
So those are our hats today. Thanks for listening. And we'll see you next week.
Cheers. Thanks for listening, everybody.